and welcome to Zee Commodity Capsule. All the global commodities are trading in red even today on Wednesday. Let's start with gold, which has dropped below $4,200 an ounce and is hovering currently close to its December 2025 lows. Yes, after the US launched new strikes against Iran following downing of American Apache helicopter, driving the oil prices higher and fueling some fresh inflation concerns. We saw the latest escalation has cast a doubt on the durability of a fragile ceasefire and prospects of a broader peace agreement while extending the near complete closure of Strait of Hormuz. Investors looked ahead to the release of US inflation figures for fresh cues on the Federal Reserve's policy path in future. Stronger than expected US employment data also strengthened the expectations that Fed could raise interest rate before the end of this year. Meanwhile, Citi has lowered its up to 3-month gold price forecast to $4,000 from $4,300 an ounce previously, and it keeps 6 to 12-month gold price target unchanged at $5,000 an ounce. Meanwhile, silver prices have also dropped to their lowest level since November end and December 2025. It is hovering currently between $64 and $65 an ounce after US launched new strikes against Iran following the downing of the helicopter, driving the oil prices higher and fueling inflation concerns. Similar is the case with the Brent crude prices, which is hovering currently between $91 and $92 a barrel with a weak bias on Wednesday amid fresh tensions brewing in the Middle East. Meanwhile, we have seen that the kind of tensions have taken place. Brent crude prices have tumbled as much as 5% on Tuesday after Israel and Iran agreed to suspend hostilities following a renewed flare-up in the conflict. Meanwhile, the industry data from the United States of America show that the US crude inventories fell by nearly 91 lakh barrels last week to their lowest level in 4 months as buyers sought to replace supplies disrupted by turmoil in the Persian Gulf. Now, markets would be awaiting the US Energy Department data for further cues. Copper prices are edging lower on Wednesday as volatility in the Middle East conflict and macroeconomic concerns offset continued price support coming from the US tariff expectations. Copper on LME hovered between $13,500 to $700 a metric ton. Oil prices rose on Wednesday after US launched a new strike on Iran. Meanwhile, we have seen China's producer prices rose for a third straight month in May, its highest level since 2022, driven by rising commodity prices and improved demand in certain industries. Having said so, price support, however, on the downside continues for copper due to expectations of a decision on US copper tariffs likely in the second half of this year. US has floated a possible 15% levy on copper imports from the start of 2027, followed by 30% from 2028. Let's talk about some other base metals like aluminium, which on LME dropped towards $3,500 a ton, its lowest in a month, as persistent tensions in Middle East and prospects of higher US interest rate weighed on the demand outlook of the metal. Also, LME nickel, which traded below $18,000 a ton, falling sharply to its lowest level since mid-April as investors logged in profits. The pressure also came additionally from sluggish nickel salt transactions in China and rising inventories, which is reflecting softer near-term demand. And last but not the least, Arabica coffee. This is where you need to keep your eye on because the commodity closed below $2.45 a pound in the previous trading session, edging closer towards its 1.5-year low. Rains in Brazil may have slowed down the pace of harvesting this week, though the market expects the world's top grower to come out with a near record crop.